Tax Matters.
Good day, ladies and gentlemen, and welcome to our webinar on the Voluntary Disclosure Program. I would like to welcome Mpho Masina and Nomsama Tebula, our sign language interpreters. I am Pinkin Chinchi, serving as an operations manager in the Voluntary Disclosure Unit. It is an honor to facilitate this webinar. I trust that you will find value in our session and gain clarity and insight into the Voluntary Disclosure Program. Before continuing with our session, we would like you to be aware of the following. Upon concluding the webinar, you will be requested to fill out a brief survey. We encourage you to fully participate in this survey, as your feedback on the information provided is greatly valued. Please post all your questions on the Q&A bot, and due to the POPI Act, please do not post any personal information when posting any questions. If you are attending this session via YouTube, you will not be able to pose questions. Only those who have registered for this webinar on the Zoom platform may pose questions. We aim to respond to as many questions as we can, either via Q&A chat box or through our panel of experts during the webinar. If any questions remained unanswered, we'll post them on the SARS website under the Voluntary Disclosure Program FAQs. If you happen to experience any interruptions, the recording will be available on our YouTube channel for future viewing, and the presentation will be uploaded on the SARS website. Our program is divided into two parts. The first session is a presentation from our business area managers, which will be followed by the question and answer session by a panel of experts for the questions posted on the Q&A bot. To kickstart the program of the day, help me welcome our keynote speaker, Mr. Nicholas Machili. Nicholas Machili heads the VDU division at SARS with over 20 years tax experience. He holds a master's in philosophy in taxation, MBA and BCom honors. Over to you, Mr. Machili.
Thank you very much, Program Director. Good morning, our stakeholders and colleagues. I am Nicholas Nemariri Machili, and I lead Voluntary Disclosure Program here at SARS. It is great to be with you today, and thank you very much for taking time to join this session. As many of you are aware, as SARS, we are on a journey to build a tax system that people can trust, one where they can have clarity, where they are supported to comply, and when non-compliance comes with real consequences. Our strategic objectives, amongst others, is to provide clarity and certainty for taxpayers and traders regarding their obligation. We want to make it easy for them as far as possible to comply. To achieve that, we are on a journey, our modernization journey, harnessing the technology through AI advancement. What does this mean in practice? Well, for taxpayers and traders, our commitment is straightforward. We want your experience with SARS to be seamless. We are committed to detect non-compliance and also make it hard and costly for those who choose not to meet their obligation. We are helping taxpayers to understand and meet their obligation. Hence, we have this kind of sessions. And we want to thank you very much for taking your time to come and attend this session so you can understand where VDP fit in the whole scheme of things. Well, SARS through VDP gives taxpayer a safe, structured way to fix past mistakes. It does not matter where those mistakes come from, whether they were accidental or deliberate. SARS through VDP uses this platform to regularize and to help you to comply going forward. We want to widen the culture of voluntary compliance, and we also want to give you, as a taxpayer, certainty. So SARS cannot achieve this on its own. So, ladies and gentlemen, I want to emphasize how much we value our relationship with our stakeholders. This includes you, taxpayers, tax professionals, recognized professional bodies, tax practitioners, legal fraternity, accounting fraternity. We rely on you. You have a role to contribute in promoting voluntary compliance. Our commitment, therefore, is to continue to collaborate with you so that we can have a sustainable, trusted tax system. So today, what we are going to do is to unpack all of this in more detail. We will aim to answer as many questions as possible. Our goal is simple. We want to make it easier for those who want to comply. We want to provide certainty to those who want to comply. And of course, we will make it difficult and hard and costly to those who choose not to comply. Thank you very much for taking time to come and join us in this session. Thank you.
Thank you, Mr. Machili, for the wonderful welcome address. If you have just joined us, don't worry. The full recording of this session will be available on our SARS YouTube channel. And upon concluding this webinar, you will be requested to fill out a brief survey. We encourage your full participation in this survey as your feedback on the information provided is greatly valued. Remember to post your questions in the live Q&A bot. This session will help you understand what the Voluntary Disclosure Program is, why it exists, who can apply, and what are the benefits. We'll also answer questions and explain how the VDP works in simple terms. Ladies and gentlemen, next on our program will be Mr. Faisal Ali, who will be taking us through the VDP presentation. Mr. Mohammed Faisal Ali is a business area lead with 26 years of services at SARS. He holds a bachelor's degree in taxation from the University of South Africa. During his tenure at SARS, he has held various roles and is currently a business area lead responsible for centralized operation dealing with VDP applications, assessment, and debt collection within the VDP division. Over to you, Mr. Ali.
Good day, all. I trust we are all good this morning. The purpose of this presentation is to provide information to taxpayers and to enable non-compliant taxpayers to comply with their obligations. The role of the VDP on the SARS strategic intent of promoting voluntary disclosures or compliance are the following: making it easy for taxpayers and traders to comply with their obligations, providing clarity and certainty to taxpayers, enhancing stakeholder engagements, as well as enhancing public trust. How do we do this? The VDP process is an easy process. Taxpayers may apply for VDP via e-filing. Taxpayers have the ability to submit documentation and information via e-filing or via email. Taxpayers then submit returns and binding agreements are concluded with taxpayers meeting the requirements. In terms of our service charter requirements, the VDP is compelled to finalize applications within 90 days of receipt of required information. To the extent the record-keeping requirements are met, the VDP will accept reasonable estimates where documentations are not available. The VDP also has a collaborative approach with assisting taxpayers. Cases are allocated to individual evaluators who will personally engage with the taxpayers up to conclusion of the agreements or the process itself. How does the VDP provide clarity and certainty? We work in a secure and confidential environment for regularizing tax affairs, both the physical environment and as well as access to the system. These are ring-fenced. VDP staff members work at head office in a ring-fenced building. The system's access is limited to VDP staff members. We also engage in binding agreements on tax defaults, where the agreement is binding upon SARS and the taxpayer gets confidence and clarity and certainty once the agreements are finalized. To the extent taxpayers have uncertainties around the eligibility requirements, a taxpayer may make a application for a non-binding private opinion in terms of Section 228. No personal details may be shared with SARS, and these are on a no-name basis. SARS will evaluate the information and provide a non-binding private opinion from which the taxpayer may then decide to apply formally for VDP. Stakeholder engagements and enhancing public trust and confidence are done by fostering positive relationships with professional bodies and tax practitioners via regular meetings, presentations, panel discussions, and invites. The VDU takes increasing awareness about the VDP among stakeholders as critical, as these are essential in providing clarity, certainty, making it easy for taxpayers to comply, and most importantly, to try and build public trust and confidence in our process. The VDP, in terms of its strategic objectives, are the following. The VDP is an internationally accepted mechanism introduced to provide relief. The South African VDP was benchmarked against various countries, and we are of the view that the relief that is provided under the VDP is quite generous. South African taxpayers with tax defaults in respect of any tax types administered under the Tax Administration Act are encouraged to make use of it. Note that these are not limited to core tax types. The VDP was introduced for taxpayers who erroneously miscalculated their taxes or deliberately evaded their taxes. The objectives of the VDP as a product offering of SARS are to broaden the culture of tax compliance, i.e., by making it easy for taxpayers to comply. The process is easy, as explained previously, and the VDP is one of the mechanisms to broaden the culture of tax compliance. To increase the taxpayer base, where taxpayers are not registered with SARS, taxpayers may register and apply for VDP in the event there is a tax default. Then the other objectives are by reducing the tax gap and revenue leakage, and to provide certainty to taxpayers regarding the tax affairs. These are twofold: to provide non-binding private opinions as well as signing binding agreements with taxpayers. The principles of the VDP are the following. Something that has already entered the SARS system or mind and which SARS has knowledge of will not fall within the VDP space, but should be dealt with in terms of the normal SARS processes, unless under strict circumstances contemplated in Section 2262 of the Tax Administration Act. The disclosure must be full and complete in all material respects, and information withheld that is deemed material renders the application invalid. In such cases, taxpayers will be provided ample opportunity to make full and complete disclosures. Taxpayers are expected to remain compliant after finalization of their VDP, hence the limitation of 5 years for disclosures with similar default. So for example, in the event a taxpayer enters into an agreement with SARS, for example, on input tax, disclosing certain invoices or reversing certain invoices claimed, that taxpayer may then not apply for the same similar default within a 5-year period, as there has been an application that was previously adjudicated. The disclosures must be in the interest of the fiscus to the extent there is tax payable and to the extent there is a reduction in assessed losses where the default results in the reduction. SARS will enter into agreements with taxpayers. The benefits of the VDP. These are contained in Section 229 of the Tax Administration Act, where SARS must This is not a discretionary mechanism, but SARS must act on. In not pursuing criminal prosecution for a tax offense arising from the default, SARS must grant relief in respect of any understatement penalty referred to in column 5 or 6 of the understatement penalty percentage table in section 223. This table contains behaviors where it ranges from substantial understatement to tax evasion. The penal provisions here are from 10% and up to 150%, depending on whether the applicant is also subject to an audit or not. Column 5 or column 6 apply in this regards. To the extent as well as granting relief with respect to administrative non-compliance penalties imposed under Chapter 15 or a penalty imposed under a tax act. There's a specific exclusion though. This is for a penalty imposed for the late submission of a return. Examples of administrative non-compliance penalties imposed under Chapter 15 are underestimation penalties, the paragraph 20 penalties, where the taxpayers want to increase their understatements with respect to defaults in respect to the submission of amended returns. To the extent taxpayers have employees defaults as well as VAT defaults, the late payment penalties are also waived in the event a VDP agreement or application is successful. The information, including the VDP-01 form and supporting documents submitted via the VDP process, are not shared with any other division within SARS. As explained previously, we worked in a strict confidential environment, inclusive of the system's access, as well as the VDP forms and supporting documentation thereto. The introduction of voluntary disclosure program for customs and excise. There has been a specific exclusion with respect to a tax type under the Tax Administration Act. This is customs and excise tax type. Following requests from various stakeholders, the Minister of Finance announced proposed legislative amendments to review and provide for a customs and excise voluntary disclosure program. The legislation involves the insertion of a chapter on voluntary disclosure relief in the Customs and Excise Act 91 of 1964. The Minister will further announce processing dates for VDP applications with respect to the Customs and Excise Act. I thank you for the opportunity for my presentation, and we look forward to my colleague Zelda Myberg. I thank you once again. Zelda Myberg is a business area lead in the SARS Voluntary Disclosure Unit, overseeing specialized and standard operations. She holds a BProc and an LLB degree and has over 26 years of experience in various divisions within SARS, supporting taxpayer compliance and service excellence. Zella Mayberg, welcome. Thank you.
Thank you so much for that welcome, Faisal. Yes, I will now draw our attention to the VDP technical concepts and court cases. We will zone into more technical legislative requirements and then see if we can also assist you with some tips when applying for VDP. Firstly, we'll look at who may apply for VDP. Individuals, companies, and or representatives of such individual or company may apply. Also, a person who is not given notice of a commencement of a SARS audit or criminal investigation. Keep in mind when we speak of companies and representatives, that also includes trusts and that also includes estates. However, there is an exception when a person who has been given notice of an audit or investigation may apply in terms of Section 226 of the Tax Administration Act. A senior SARS official may direct that person who is under audit or investigation may still apply under certain circumstances. And on this point, we want you to note that where a person is uncertain whether he or she may apply, one should rather apply for VDP and see if they qualify for VDP relief, rather than disqualifying oneself by not even attempting to utilize the VDP opportunity. Further, it is important to note that where the taxpayer does not have proper records, the VDU will accept reasonable estimates, keeping in mind that although we'll accept reasonable estimates in VDP, it is still your voluntary disclosure which should be able to withstand an audit from SARS at a later stage. So what are the requirements for a valid VDP? Here, the requirements of Section 227A of the Tax Administration Act must be met. The disclosure of the default must be voluntary. The default being disclosed must not be similar to a default previously disclosed in the last 5 years. And the disclosure must be full and complete in all material respects. In this regard, you should note that the VDP disclosure is not limited to a specific period, and the taxpayer may apply for VDP relief from the date the default occurred, which means if the taxpayer, for example, omitted to declare foreign interest since 2002, the application should be from 2002. This also includes credit periods or periods resulting in refunds. Although relief cannot be granted on refunds, it must still be disclosed to VDP to render the application full and complete. Further, the default must involve a behavior listed under the understatement penalty percentage table in Section 223 of the Tax Administration Act. This table is the one that Faisal referred to earlier with regards to the percentage of penalties that may be imposed when there is any default. So please keep in mind when you apply for VDP, also go and have a look at the behavior stated in Section 223 of the Tax Administration Act. Also, the declaration must not result in a refund due to the taxpayer, and the application must be made in the prescribed form and manner. Now, the prescribed form and manner would be via SARS e-filing on the VDP 01 form. We will now look at the concept of the word default. For purposes of the VDP, a default is the submission of inaccurate or incomplete information to SARS, the failure to submit information, or adoption of a tax position. So what is a tax position? Section 221 of the Tax Administration Act defines it as an assumption underlying one or more aspects of a tax return, including whether an amount, transaction, event, or item is taxable, an amount or item is deductible or may be set off, a lower rate of tax than the maximum applicable applies, or an amount qualifies as a reduction of tax payable. Here it is important for us to note that the default must result in an understatement. In other words, it must result in a shortfall, and there must be a tax prejudice to SARS. A practical example of this would be where previous undeclared income resulted in assessed losses. If you are bringing the defaults of the undeclared income to VDP, and the effect of the VDP assessment then results in the reducing of the assessed losses, that may qualify for VDP relief. However, if there is an increase in the assessed losses, this will not qualify. Next is our concept. We're going to look at the concept disclosure. The term disclosure is not defined in the Tax Administration Act. So we look at the Cambridge English Dictionary. Disclosure is defined there as to make something known publicly or to show something that was hidden. The word disclosure was considered in the Reeds matter, where the judge stated that disclosure means to open something closed or folded up. If somebody already knows something, it is difficult to see how another person can disclose the thing known to the first person. So determining whether something is disclosable is an objective test. If a person already knows something, it cannot be disclosed. Now, in this case, what we saw is the taxpayer was aware that SARS was looking into his tax affairs, and then he submitted a VDP application. And the court held that the taxpayer had not disclosed anything that SARS was not already aware of. Another example of this is where SARS is auditing your partner on rental income, and then you apply for VDP relief also for undeclared rental income. That is something that SARS is aware of. When we look at the last concept, it is voluntary. Now, the meaning and understanding of voluntary is of the utmost importance. Section 227A of the Tax Administration Act requires that the disclosure must be voluntary, hence also the name voluntary disclosure. Now again, voluntary is not defined in the Tax Administration Act. So when we look at the Cambridge English Dictionary, it is defined as something done, made, or given willingly, without being forced or paid to do it. In the purveyors matter, the court considered whether the VDP application was voluntary in terms of Section 227A. And in this case, in the purveyors case, both the High and the Supreme Court of Appeal agreed with SARS's argument that the taxpayer's application was not voluntary, based on the following reasons. If there is an element of compulsion, it is no longer voluntary. The VDP application was brought in fear of being penalized, as the taxpayer was informed by SARS of their tax liability and that penalties may be imposed. Our takeaway from this is that in determining whether the VDP application is voluntary, the question is, what probed the taxpayer to apply for VDP? So don't wait until SARS knocks at your door. Rather, knock at our door first. When we proceed to the next part of voluntary, another example where voluntary is relevant is where a person should have been registered for a tax, say for example for VAT, but SARS was not aware that the person should have been registered for VAT. In such an instance, the person must register for VAT and for the VDP application to be regarded as valid. The VDP application should be submitted via e-filing within 21 business days or 1 month from the date of registration for that tax type. Note, however, that outstanding returns do not qualify for VDP relief, as SARS are aware of the outstanding returns, and thus the default is known to SARS. The last case we will be looking at is the Medtronic court case. The VDP applicant requested for remission of interest after concluding a VDP agreement. And SARS indicated that it could not consider the request for remission of interest. It was then considered by the Supreme Court of Appeal, and eventually the Constitutional Court held that on a proper interpretation, the tax administration does not permit remission of interest, as interest is an integral component of the voluntary disclosure agreement. Further, VDP is a self-contained legislative provision. So this brings us to the end of our technical aspects of VDP. And we also want to just bring to your attention that the VDU is committed to ensure that we meet the service charter's measures, and that include allocation of 9 out of 10 applications within 30 business days of receipt thereof, and to finalize 9 out of 10 applications within 90 business days, where all requested documents have been received. And I think the moment you've all been waiting for is that I can now share some practical tips with you. The first tip is, if you have not received an acknowledgement of receipt of your VDP application within 48 hours of submitting it via e-filing, please contact the VDU and we will assist. Secondly, the taxpayer and his tax representative must both be registered on e-filing and linked to the taxpayer's tax types and profiles to apply for VDP on the taxpayer's behalf. Number 3, if you are unsure whether you will qualify for VDP relief, you may request a non-binding private opinion on a no-name basis. By ticking the relevant box on the VDP application, there is a box and you only have to tick there to say this is a no-name request for a non-binding opinion, and then the VDU itself will issue this non-binding opinion. And should you, after receiving our opinion of whether the client would qualify for VDP relief in the specific circumstances mentioned in your application and the information you provided, and you should decide to proceed with the VDP, you may submit a named VDP application via e-filing. Please note that your client is only in VDP officially once there is a named VDP application. A request for a non-binding opinion is not an official VDP application. Number 4, you can attach supporting documents to the VDP application. But if you are unable to do it, a VDP evaluator will contact you and you can email it directly to the VDP evaluator. Please do not send it to normal source. That information should come to the VDU itself, and the VDP evaluator will contact you. Number 5, SARS may accept reasonable estimates where defaults go beyond prescription periods where applicable. And lastly, it is important to determine the affordability of the full tax debt before applying for VDP, as the tax and interest payable is reflected in the VDP agreement. So you have an idea of the liability and you don't get shocked when the VDP assessments are raised. And then for any further VDP related queries, you are welcome to email us directly to vdp@sars.gov.za or call us on our toll-free number 0800 864 613. Note that this is not a call center number and you will be able to speak directly to one of our VDP evaluators. You may also refer to the VDP guides, which are published on the SARS website, and there are also frequently asked questions, which might be helpful. I thank you so much for the opportunity, and Madam Director, I'm over to you. Thank you.
Thank you, colleagues, for your insightful presentations. We continuously aim to simplify the voluntary disclosure program process, and I hope our audience now has a clearer understanding of the tax implications involved within the VDP. We now proceed to the second segment of the program, where our panel of experts will address your concerns and respond to the questions submitted via our mailbox and Q&A chatbot platform. Remember to post your questions on the live Q&A bot. Please do not share personal information in the chat. If necessary, email the VDP mailbox instead on vdp@sars.gov.za. Ladies and gentlemen, let us welcome our facilitator, Ms. Roweda Collins and Mr. Johan Futh, the specialist within the VDU space. Over to you, Roweda and Johan.
Thank you, Program Director. Good morning, everybody, and thank you once again for joining us for this VDP webinar. My name is Roweda Collins, and together with my colleague Johan Futh, we will be the panel moderators for this part of the program this morning. Hi, Johan.
Hi, good morning, Roweda. Good everyone. Yeah, attendees, I see there's a lot of questions. So I hope it's insightful, this session, and you get your questions answered. So yeah, looking forward. Thank you, Roweda, over to you.
Thanks, Johan. So this part of the program will be broken up into two sections. The first section is a list of frequently asked questions, which we have compiled through our stakeholder engagements that we've conducted throughout the financial year. The second part of the section will be made up of answering the questions that have been posted on the Q&A live chat. So our panel members this morning are Mr. Faisal Ali. Welcome, Mr. Ali. Welcome back.
Good morning, all. Thank you once again.
Thank you. And then our second panel member for this morning is Zelda Mayberg. Welcome back, Zelda.
Thank you so much.
I'm going to continue with the first question from this morning. Zelda, it's a question for you. So one of the questions from the audience here was from previously asked questions is, the VDP aims to increase voluntary compliance in the interest of enhanced tax compliance, good management of the tax system, and the best use of SARS resources. Do you believe the VDP is succeeding in this purpose?
Yes, thank you, Johan. Yeah, it is our view that the VDP is succeeding in its purpose. The VDP contributes towards the strategic objectives, making it easy for taxpayers to comply. It's an easy process. It's a collaborative approach we are utilizing, providing clarity and certainty because we enter into binding agreements with our taxpayers, and the taxpayers can interact anonymously with the voluntary disclosure unit. And the unit provides then a non-binding private opinion. You also note that, like this specific intervention we're having now, also that the VDU works through stakeholders and in enhancing public trust and confidence. And the success of the program is dependent on taxpayers and the tax practitioners. We continuously see VDP applications flowing in, and increased quality of applications are being received. Since inception, I mentioned we completed thousands of VDP applications, and we also contributed in over 40 billion rands of revenues collected. And in that, we are still assisting taxpayers to become tax compliant and that they can sleep peaceful at night. Thank you.
Thank you, Zelda. Appreciate that. Is insightful, and the confidence that it gives our VDP clients. Just before I hand over to Ruwaida, there's just one question for you as well, Faisal. So the next question that I have here is, what are the main advantages for taxpayers of entering into a VDP? Can you maybe clarify for us there, Faisal?
Section 229 of the Tax Administration Act provides that SARS must. This is mandatory, it's not discretionary. To the extent the taxpayer meets the requirements of VDP and it is processed accordingly, SARS must not pursue criminal prosecution for a tax offense arising from the default. SARS must grant relief in respect of any understatement penalty referred to in column 5 or 6 of the understatement penalty percentage table in section 223. What this means is that in practical terms, as an example, for instance, VAT, if the capital tax to be paid is 100,000 rands, and if the behavior attributable to the default is tax evasion, then under normal circumstances, SARS will levy 150,000 rands penalties if the capital was 100,000 rands. However, within the VDP space itself, this penalty will be reduced to 10% of the capital, i.e., 140% will be waived. Then 10,000 will be applied on the 100,000 rands capital amount. Now, for the substantial understatement, reasonable care not taken, and no reasonable adoption of a tax position, these are reduced to 0. Gross negligence attributes 5% after relief, and tax evasion, as explained, 10%. SARS must further grant relief in respect of an administrative non-compliance penalty imposed under Chapter 15 or a penalty imposed under a tax act. This excludes a penalty imposed for the late submission of a return. Here, examples of these are your underestimation penalties, where a return is to be amended, that being your income tax return, and any paragraph 20 attributable to that default will be waived. For VAT and PAYE or employees' taxes, the late payment penalties are reduced to 0. And you have other non-core or other taxes where VDP relief is also applicable on the non-compliance penalties. Information including the VDP form and supporting documents submitted via the VDP process is not shared with any other division within SARS. Thank you, Johan.
Thank you, Faisal. Thank you for providing that clarity. Ruwaida, welcome this morning. Do you have any questions for us from your side? Ruwaida, your mic maybe. Just check there. I'm going to continue while Ruwaida is managing a mic there. So the next question that we do have is, what is the average turnaround time for a VDP application from submission of the application to the conclusion of a VDP agreement? Zelda, maybe you can help us out on that one.
Yes, thank you so much, Johan. The VDU has been included in the service charter, as mentioned before, and for the last 3 years even, we have the division strives to allocate the VDP cases within 30 days of receipt of a VDP application, and to complete the VDP applications within 90 days of receipt of the final information. The average turnaround time for completion of VDP applications from evaluation to completion is currently around 35 days. But if we look at the end-to-end process, that is from the moment of application until it is totally finalized, we're looking at around 76 days. So in saying that, keep in mind that the VDP application is not finalized only once the outcome letter or the VDP agreement is signed, but it's truly only finalized once that outstanding tax and debt is paid. Thank you, Anne.
Thank you, Zala. That's indeed insightful. Thank you for that. Ruwaida, just checking, are you able to ask us some questions? Do you have any questions from your side?
Yes, thanks, Johan. Okay, so the next one of our frequently asked questions from our engagements with our stakeholders is, what are the typical mistakes or issues that disqualify VDP applications? Faisal, can you perhaps give us some more insights on that?
Yes, I must say that quality of VDP applications have increased over the years, where taxpayers and tax practitioners alike have utilized the relevant guides, the FAQs. In saying that, we also have increased our production of agreements and conclusion of agreements. However, what we find as errors are the following: applications not being voluntary. To the extent applications relate to outstanding returns, and I see a few questions around that in the chat as well. Outstanding returns do not qualify for VDP relief. It's simply a requirement under Section 25 of the Tax Administration Act for a taxpayer to submit those tax returns or these outstanding tax returns via normal SARS channels. Then we have applications where there are ongoing audits, verifications, or investigations in respect of related defaults. To the extent taxpayers make applications, what taxpayers need to know is that the default must be unrelated and ensure that there are no current SARS interventions when applying for VDP. Then we have scenarios where the application does not meet the definition of default as explained previously by Zelda, the definition, which results in understatements. Taxpayers must calculate the tax liability to confirm if there is an understatement prior to the submission of a VDP application. Or if the returns are not yet due, or simply it's a question of the exemption applying, then these may be submitted via normal channels on or before the due date, or to the extent there is an issue and this issue does not relate to an understatement, disclose it via normal processes. The third matters that we find, and these are also minute matters, is full and complete. As we've indicated, VDP applications are sent through for evaluation. A consultant, an evaluator will get hold of the person applying via the applicable email address placed on the VDP form. And in their communication, the evaluator will request further information to test, for example, tax periods, tax types, whether or not prescription applies, whether the appropriate behavior is contained in the application. And insofar that goes, ample opportunity is provided for a taxpayer to make an amended disclosure. And generally, taxpayers will make the full and complete disclosure. And in general, we will enter into an agreement. SARS has published 2 guides with examples. One of them will go into the requirements for VDP, and the other is a step-by-step guide on how to apply for VDP utilizing the e-filing platform. There are also frequently asked questions on the SARS website. Thank you, Ruwaida.
Thank you so much for that, Faisal. That was very helpful. Okay, so Zelda, we keep hearing the term similar defaults. Could you perhaps give us some insight for the taxpayers as to what would constitute a similar default in the VDP space?
Yes, the term similar default in the context of VDP means once a VDP application is made for a specific default, the taxpayer may not apply for a similar default within 5 years of disclosure of the previous VDP application. This includes not disclosing the same default within that 5-year period. So the 5 years we must almost see as a probation period. If a taxpayer applies for VDP, make a certain declaration within 5 years, there shouldn't be another VDP application that will be allowed on a similar default. Now, an example of that is if a vendor disclosed the use of an incorrect apportionment ratio and subsequently applies for the failure to use an apportionment ratio. This is considered similar. If a taxpayer's application was previously invalidated, the taxpayer cannot apply again for VDP for a similar default within 5 years. Thank you, Rueda.
Thanks, Zelda. That's very, very helpful. Just one more question before I hand over to Johan. Zelda, does the VDP unit have access to regular SARS information on taxpayers and vice versa? So does VDP have access to regular SARS information? And do the greater SARS officers have access to VDP information? Can you perhaps just explain for our audience?
Yes, the VDU has access to regular SARS taxpayer information and the SARS systems. However, when it comes to the VDP disclosure information, the VDP division works in a strictest of confidence. No other SARS division has access to the information disclosed by taxpayers to the VDP unit. There is this Chinese wall concept that applies between the voluntary disclosure unit and the rest of SARS. The VDP is a division that is ring-fenced, as indicated earlier by Faisal also. And so we're ring-fenced from all other divisions or in SARS, but keeping in mind that when VDP assessments are raised, those assessments are on the SARS systems, and SARS, the rest of SARS outside of VDU will be able to see that, although they will not know the detailed information regarding that disclosure, because what happens in VDP stays in VDP, and we keep the information and the details of that disclosure in VDP. Thank you.
Thank you for that, Zelda. I think that gives our audience a lot of comfort, because that seems to be a burning question that keeps coming up frequently with regards to the security and the privacy of the information shared with the SARS VDU. Johan, over to you.
Thank you, Rueda. Yes, I agree with you. Thank you for that clarity as well, Zelda. So I've got two questions here for Faisal. First one, Faisal, is what is the VDP's unit's position on the remission of interest in relation to VDPs? Can you maybe explain for us there?
Yes, Sean, thank you for the question. We need to take this one a little back. So prior to the VDP under the Tax Administration Act, the VDP had rolled out a legislation prior to, as indicated, the TAA. This particular VDP was known as the VDP 1 for applications within a specific window period between 2010 and 2011. In this specific VDP, interest relief was provided for. However, the legislators refined the relief, and in terms of VDP 2 under the permanent legislation, it was never the intention to grant relief in respect of interest. This can be found in the Memorandum of Objects as further explanations thereto. The Medtronic Constitutional Court case did not change anything for the VDP. It simply emphasized the legislation as it currently stands, i.e. there is no interest relief. Now, with respect to VDP, it's not an amnesty, and it should also be noted that there is a cost element to non-compliance. So how does one differentiate between a compliant taxpayer who diligently submits, returns on times, and makes the full payment with respect to the returns on time? There should obviously be a distinguishing factor between a compliant taxpayer and a non-compliant taxpayer. Further, remember, interest is based on use of funds, and at a certain point, SARS was not in possession of the taxes with respect to the defaults now being disclosed. Thank you, Johan.
Thank you, Faisal. There's one last question here, and thanks for the clarity on that one. Last one from me here now is, what is your view on, or VDP's view on VDPs in relation to withholding taxes, and what challenges or opportunities do you foresee? What types of withholding tax do VDPs encounter?
So with respect to the legislation, Johan, the TAA provides for all tax types, right, that are administered under the TAA or under the SARS Act. What we see taxpayers focusing on is on the core tax types, i.e. income tax, be it PIT or CIT, or VAT or employees' taxes. What taxpayers do not focus on are the other tax types. And here the VDP sees opportunities for taxpayers to come in and regularize their tax affairs on other taxes. Now, examples of these other taxes that may qualify for VDP relief are withholding taxes on interest, withholding taxes on royalties. Then you have withholding taxes on dividends, i.e. dividends taxes. Then we have others like securities transfer taxes, donations taxes, etc., and etc. Now, with regards to some of these tax types, there are international legislation, i.e. double taxation agreements, which may apply. Now, these double taxation agreements take precedence over local taxation. So, for example, to the extent a double taxation agreement indicates that a withholding tax should not be withheld at 20%, but rather 10%. Here, SARS's requirement is a declaration. Those declarations need to be submitted within a 3-year period of obviously the original declaration. So from a VDP side, what we say is the taxpayers must consider the declaration, bring in the declaration together with the VDP application insofar as the reduced rates go, and these applications will be considered on a full and complete basis. There are instances where the double taxation agreements reduce the tax payable to nil. In such cases, there is no default, as any agreement will result in a temporary agreement. So what we say here is that taxpayers should simply regularize that particular issue via normal SARS process. Thank you, Johan.
Thank you, Faisal. Thank you for providing clarity and informative background. Thanks for that. Ruwaida, any questions from your side?
Yes, thanks, Johan. So there seems to be a perception that most VDP applications are cancelled due to not being voluntary. Is this something you've observed in your role at SARS? If not, what does the record show that you could possibly share with the audience, Zelda?
No, this is not the case. No, I believe the perception is wrong, and the reason why I'm saying that is there is a robust process in place to evaluate all VDP cases prior to any cancellation or any decision taken by the VDU. Taxpayers are encouraged to submit outstanding returns via normal SARS processes, and also remember that they must ensure there are no SARS interventions. For example, verifications or audit investigations or relate to the defaults they want to come to and declare to VDP. So the best advice we've got here is to say, don't wait too long. Submit that VDP application as soon as you realize there is a default, because then you know you came to us first before there is a verification letter or anything. And unfortunately, in such an instance, then your VDP relief may be denied. I hope that clears it up.
Yes, thank you very much. So just to reiterate what Zelda says, if you are in a situation where you've understated your taxes, it's best to approach SARS before SARS approaches you on a verification or audit basis. So thanks for that, Zelda. Johan, any more questions?
Yeah, I'm just going to latch on to those that answer and question that was given to Zelda. Thanks for that, Ruida. I'm going to pose it to Faisal. So when applications are deemed not full and complete, then what process is followed before a case is finally denied on this basis? Faisal?
Thanks, Johan. So in the event an application is made, the application goes through relevant processes, sits with an evaluator. The evaluator goes through the requirements, one being full and complete in all material respects under Section 229C. Here, if the evaluator feels that there are further information to be required, they will request such information or direct contact with the taxpayer or the email address provided. In such instances, the taxpayer will be provided ample opportunity to provide the information requested, and subject to the provision of the relevant information and analysis thereof, the VDU will proceed into an agreement or further request for information depending on clarity sought. Thank you, Johan.
Thank you very much, Faisal. Ruida, any questions from your side?
Yes, thanks, Johan. Zelda, would you recommend that a taxpayer engage with SARS directly or through the use of a tax practitioner?
Taxpayers may engage SARS directly or consult with a tax practitioner. SARS will be able to provide clarity and certainty to taxpayers, and that's our role. However, keep in mind that you do not need a tax practitioner in order to apply for VDP. You can submit that VDP application on your own behalf when you do your own e-filing. Thank you.
Thank you for that, Zelda. I think that's very useful information for our taxpayers and audience alike, in a sense that they should not be deterred from the VDP process and think that they need the assistance of a tax professional. We are here to help, and we will receive all applications, even if unassisted by a tax rep. So thanks for that, Zelda. Johan, any more questions from your side?
Yes, thanks, Ruida. Yeah, in consideration of the previous question, so audience would like to know, what are some of the common defaults that taxpayers or individuals they intend to disclose and have regularized? Faisal, maybe you can help out a bit here.
Yes, Sean, this mainly relates to personal income taxes. What we find is understatement of income. Now, taxpayers may have various income streams, right? Be it locally rental income, be it foreign rental income, be it local interest, be it foreign dividends. SARS is also looking currently at crypto investments. Here, we implore taxpayers to consider whether the investments, the crypto investments, are revenue in nature or capital in nature prior to applying for VDP. So these are some of the understatement of income issues. Further, SARS is also concentrating on trust. There's product enhancements there, as well as SARS is auditing and verifying trust returns. So to the extent that a taxpayer is a beneficiary of trust income, these can also be disclosed via VDP insofar as they meet the requirements. Then there are structures, connected parties, where there are loans to some of these trusts that are subject to various forms of taxes. Here, taxpayers are required to look at the tax consequences and submit VDPs. Now, in all of these instances, we note from our own experiences from VDP applications being made and agreements concluded there too. Then we have also instances of non-compliance where a taxpayer has never been registered with SARS. SARS does not know of this taxpayer. There's no compliance history. What we say in these applications or in these circumstances, taxpayers must register for the applicable income tax reference number, get the relevant profile, and within 21 days, submit a VDP application. And here is where the crux of the matter relies. There should be a default, which is incorrect information, non-submission of information, or a tax position adopted, where such submission will result in an understatement, i.e., the declaration must be to the extent where there is tax payable. Then we have instances of expenses previously overstated, like traveling, medical, home office expenses, etc. Once a taxpayer finds that these are the scenarios or these are the situations, a taxpayer may apply for VDP with respect to PIT. And then there are other applications of law like donations tax that a taxpayer may apply for in that space where there are bequeathals involved. Thank you, Johan.
Thank you, Faisal. That was very informative, and the clarity that comes with it. Thanks for that. I've come to the last of my questions. I have no more pre-prepared questions. And I see our dedicated specialist has quite have a time with answering all those questions in our audience. So thanks for that, Krista. So Ruwaida, over to you. I don't know if you have any last questions left, and then closing remarks from your side, maybe.
Yes. The final of our pre-prepared questions for this morning, and I want to pose it to you, Zelda, is how many VDP applications can a applicant submit in a given year for a single tax product? Does submitting multiple VDP applications put the taxpayer in a bad light with SARS?
Taxpayers are encouraged to conduct their tax reviews and apply holistically for VDPs. So there is no limit on the number of VDP applications you can apply for and submit in 1 year on a specific tax type. However, when we say they must do a holistic tax review, it is acknowledged that there may be multiple streams of transactions and multiple tax type registrations that need to take place. So taxpayers may apply for different defaults. For example, VAT, if a taxpayer applies for output tax on one application, and later the taxpayer finds an unrelated input tax default. The taxpayer then may apply for the unrelated default again. So that would be another application for that in a specific time period. But when we look, for example, at income tax, if a taxpayer applies for other income in the first VDP and then subsequently finds an unrelated CGT default, the taxpayer may apply for that, noting that the requirement is that the taxpayer may not apply for a similar default within a 5-year period. But no, there wouldn't be any bad reflection on that taxpayer who applies for VDP for multiple defaults when we can see, SARS can see that this person only wants to do the right thing, to come to us and come clean and be tax compliant. Thank you.
Thank you so much for that, Zelda. It appears that we have reached the end of our prepared questions. At this point in the program, we would move on to our live Q&A chat. Krista Peterse has been assisting us in answering the questions that have been posed by the audience. Johan, I see any Q&As which have gone unanswered that perhaps we should address to the panel members while we have their attention?
I don't pick up anything specific, but I do want to say if there's any technical questions, regarding a specific case of a taxpayer, I see a few here. I would advise rather for the audience or the applicant to email us at VDP, and then we can have a thorough look at the background of the case before we just answer. So I would urge, the audience, and we gladly will assist. So please email us if it's a specific matter related to you, and it's a bit technical to answer in this session, because we may need some background information. So I've not picked up anything that Krista has not answered yet. If there's anything I've missed, Ruwaida, maybe, I don't know if you see something from your side?
No, I don't see anything that's been unanswered or remains unanswered. So we do encourage the audience members to please submit any further questions to our email address, vdp@sars.gov.za, and we will try our best to respond to your questions. So thanks, Zelda. Thanks, Basil, for participating in our panel discussion this morning. It's been very insightful. I'm sure the audience has appreciated all the information and insights that you have shared with them. So thank you for your attendance.
Thank you so much.
Thank you, Johan and Ruwaida.
Thank you. Johan, anything to say before we close out and hand over to the program director?
From my side, I just want to thank everyone here today, the audience. Without you, SARS is not here and we're not here. So thank you for participating in these sessions. It's good for us and it's good for you. And we hope to see you soon again with another session. And that's from my side. Thank you, Ruwaida. Thank you, everyone.
Thanks, Johan. And I share Johan's sentiments. Thank you, everybody, for your time. Over to you, Program Director. Thanks, Pinky.
Thank you, colleagues, for your prompt response to the questions. If your question has not yet been answered, please look out for the FAQs on the SARS website for the response to your question. Remember, this webinar can be found on the SARS website and the recording can be accessed on our SARS YouTube channel. Please don't forget to follow us on YouTube, X, Facebook, and LinkedIn. And upon exiting this webinar, you'll be directed to the survey. Please ensure that you complete this survey as your participation is greatly valued. Thank you, ladies and gentlemen. My responsibilities are now complete, and I will hand over to Mr. Nicholas Machili for the closing remarks. I wish you all a wonderful day ahead. Over to you, Nicholas.
Program Director, thank you very much for great job done. Well done. Ladies and gentlemen, as we conclude today's session, I want to sincerely thank each and every one of you for your active participation, your insightful questions, and your commitment to uphold a culture of voluntary compliance. Your presence here today demonstrated the collective dedication we share towards our tax system. We noticed that there are questions pertaining to debt compromise. So I've engaged the head of the debt management, and we agreed that we will forward those questions to him. And if there's any other additional questions pertaining to compromise, urge you to send an email to compromisecampaign@sars.gov.za. It's compromisecampaign@sars.gov.za. You are welcome to copy VDP mailbox so that we can see to it that your questions receive attention. We are aware of the technical glitch that we experienced, and we want to assure you that we will do our best to join the first part or the pre-glitch and the post-glitch in our YouTube link, and then we'll reshare or circulate that link for your future reference. We have explored the importance of the VDP and how it serves as a valuable tool for both SARS and you as a taxpayer. I would like to personally extend my appreciation to our organizers, presenters, our program director for a job well done. It is because of this professionalism and dedication that you made this session informative and successful. Before we close, may I also request or encourage each and every one of you, if you have not done so already, to please complete our quick survey. Your feedback is very important to us. It helps us to improve our session for your benefit. And thank you again for taking time and engaging us. And hopefully we'll have another session in the near future. So let's continue to build a culture of voluntary compliance together. Thank you.
Your tax matters.